5-minute tax guides from your 5-minute tax guy. Short lessons to help you navigate the treacherous, hazardous, and totally unpredictable U.S. federal tax code.
Estimated tax payments. What are estimated tax payments? Estimated tax is the method used to pay tax on income that isn't subject to withholding. This includes income from self-employment, interest, dividends, alimony, rent, gains from the sale of assets, prizes, awards, and others. You may also have to pay estimated tax if the amount of income tax being withheld from your salary, pension, or other income isn't enough to cover your tax liability at the end of the year. Estimated tax is used to pay both income tax and self-employment tax, as well as other taxes and amounts reported on your tax return. If you don't pay enough tax, either through withholding or estimated tax, or a combination of both, you may have to pay a penalty. And this may come as a shocker to some people. If you don't pay enough by the due date of each payment period, you may be charged a penalty even if you are due a refund when you file your return. Huh? But I'm getting a refund. Why do I owe an underpayment penalty? Even if you paid more in than what you owe at the end of the year, if you underpaid in any quarter, then you still could owe an underpayment penalty for that quarter at the end of the year. Who does not have to pay an estimated tax? If you receive salaries and wages, you can avoid paying estimated tax by asking your employer to take enough out of your earnings to cover your expected tax due at the end of the year. To do this, file a Form W-4 with your employer. Form W-4 tells your employer how much tax is to withhold from your wages. Be sure to have enough withheld so that you don't end up owing at the end of the year. You don't have to pay estimated tax if you meet all three of the following conditions. You had no tax liability for the prior year, you were a U.S. citizen or resident alien for the whole year, and your prior tax year covered a 12-month period. Who must pay estimated tax? You can use the following general rule as a guide during the year to see if you will have enough withholding or should increase your withholding or make estimated tax payments. General rule. In most cases, you must pay estimated tax if both of the following apply. You expect to owe at least $1,000 for the current tax year after subtracting your withholding and refundable credits. 2. You expect your withholding and refundable credits to be less than the smaller of 90% of the tax to be shown on your current year tax return, or 100% of the tax shown on your prior year tax return, and your prior year tax return must cover all 12 months. The following chart can help you decide if you need to make estimated tax payments. How to figure estimated tax. To figure your estimated tax, you must figure your expected AGI, taxable income, taxes, deductions, and credits for the year. When figuring your current year estimated tax, it may be helpful to use your income deductions and credits from the prior year as a starting point. You must then make adjustments both for changes in your own situation and for recent changes in the tax law. Estimated tax worksheet. Use worksheet 2-1 to help guide you through the information about completing the estimated tax worksheet. You can find a copy of this worksheet in the instructions for Form 1040-ES. When to pay estimated tax. For estimated tax purposes, the year is divided into 4 payment periods. Each period has a specific payment due date, and those due dates change from tax year to tax year. If you don't pay enough tax by the due date of each of the payment periods, you may be charged a penalty, even if you are due a refund when you file your income tax return. If a payment is mailed, the date of the Postal Service postmark is considered the date of payment. Saturday, Sunday, and holiday rule. If the due date for an estimated tax payment falls on a Saturday, Sunday, or a legal holiday, the payment will be on time if you make it on the next day that isn't a Saturday, Sunday, or a holiday. How to figure each payment. After you have figured your total estimated tax, figure how much you must pay by the due date of each payment period. You should pay enough by each due date to avoid a penalty for that period. If you don't pay enough during any payment period, you may be charged a penalty even if you are due a refund when you file your tax return. If you don't receive your income evenly throughout the year, your required estimated tax payments may not be the same for each period. How to pay estimated tax. There are several ways to pay estimated tax. You can credit an overpayment on your current year tax return to your next year estimated tax. You can pay by direct transfer from your bank account, or pay by debit or credit card using a pay-by-phone system or the internet. Or you can send in your payment with a payment voucher from Form 1040 ES. For more information on estimated taxes, you can refer to IRS Publication 505, which contains all the worksheets and instructions you will need. That's it for this session, and thanks for watching the video. Be sure to click the subscribe button on the next screen to keep informed on upcoming tax changes. For more great 5-minute tax guides, check out the other videos in my 5-minute tax guide video series. See the list in the description below this video.